away from us, away from it at the same time that they're buying it hand over fist. So I would really say, now look, I've been studying currency since 1987. We have a strategy that we look at historical patterns, and therefore what is the next most likely outcome. So you've got to have gold and silver in your portfolio simply because it's real in your possession, right? ETFs, all that kind of garbage. If you don't hold it, you don't own it. That is just a trust. The system is so corrupt and fake right now, and what has to happen is a complete reset of the entire system. And that's why you need gold, but how much are you willing to lose? Because they can drive the stock market up to $1 trillion, but those dollars have no purchasing power. Last time I checked, 1 trillion times 0 is 0. So because of my personal background, I do not own any stocks, any bonds, any ETFs, any mutual funds, any annuities, any of those fiat money products, government debt-based products. I am all in on physical gold and physical silver, which I hold. The other part of that, I think it makes a whole lot of sense to hold the lion's share of your wealth in an undervalued asset that is in a long-term positive trend, and the least amount of your wealth in an overvalued asset or instrument that's in a long-term negative trend. And so the real trend is not the stock market or the cryptocurrencies or anything else. It's the purchasing power of the currency. And officially, there's 3 cents left. But as inflation continues to heat up, because I do think we are in the beginning phases of the hyperinflation, then that will go to 0. When people lose confidence in the currency, it will go to 0. Then how much of your wealth do you want to be holding in these? Additionally, when I'm talking about value, because that's really what you want to know, where is it going to go, right? So what's the true value of an ounce of gold? That's also what I call the fundamental value, because one thing I can guarantee you is at some point, all assets go to fundamental value. That's not complicated. What gets a little more complicated, a little more nuanced, is knowing how to determine what that value is. Because you can't listen to the guys on Wall Street to tell you what that value is. They have an agenda. So since gold is real money, good money, and dollars, yuan, yen, whatever, is government-based money, the way to know how much this would go to, an ounce of gold would go to during a reset, I do it really simply because I'm not going to get you to the penny, and I don't care anyway about that, is you take all of the debt that's been created, because that's how dollars are created, or any government-based money is created by debt. And you can use that as a proxy for actually how much currency and how much fiat money has been created, because they've taken that data away from us. And then you divide it by all the gold that exists in the whole wide world, whether it's in ground or it's above ground, because gold is indestructible. And that, the last time I checked, it'll be higher now because there's more debt, but the last time I checked, that was like $13,500. So is spot trading around, 1940, 60, 80, 2,000, 5,000 even, right? It's a bargain. First of all, there is a certain cost, because you can't push a button on a computer and create this, right? So the all-in mining cost is somewhere around, don't hold me to this because I have the data right in front of me, but somewhere around $1,268 an ounce. And then it'll go up from there, but that's where it is right now. So the all-in cost, the cost to mine, and then to turn it into coinage or whatever else you're going to turn it into, that actually supports the underlying price in terms of fiat money of the gold. But what we've also really witnessed is the U.S. can block the gold sales from Russia within their realm of influence, so fellow NATO countries or allies, but not in China, not in India. And India, frankly, has a history of going around sanctions and trading with countries like Iran, Turkey and Venezuela, and all these transactions have been done with gold because the currencies really have no value. And so what we saw Russia do in the build-up to it is divest themselves of a lot of dollars and build their reserves of gold. And so they are not suffering as much as they would have if they didn't have that gold, because that gold is really their savings. Taking it down to an individual level, because that's what I really use all of these lessons for. Because it doesn't matter whether you're a government, a corporation, or an individual. The laws of economics really work the same for everybody. The governments and central banks just have the advantage that they can push a button and create fiat